Hello and good evening, everyone. Today's webinar topic is what do you call to get your finances in order? So, for this, we have with us Sashint Niktokhonjum, correspondent at Mint. He covers personal finance with a focus on helping people make smarter money decisions without getting lost in jargon. A postgraduate in business and financial journalism with ACJ Bloomberg, Chennai. Sachin also hosts the Why Not Mint Money podcast and engages with top finance professionals across the country. Now, a short glimpse about NIS. NISM is a public trust established in 2006 by SEBI, the regulator of the securities markets in India. The institute carries out a wide range of capacity building activities at the various levels, aims at enhancing the quality standards in securities markets. Now, before beginning the session, I would like to request all the participants to note some important points. First, questions will be taken at the end during the Q&A segment. Second, all participants will receive a participation certificate within 3 to 4 working days. Third, the recording of this session will be available on NISM YouTube channel. Now I request Sachin sir to begin with this session.
Thank you so much, Sahil, for agreeing to moderate this presentation. And yes, thank you so much, guys, who have joined. I can see 125 people, which is great. So I'll talk a little bit about the topic before we begin. So this is a very simple topic. If you're expecting to learn some, complicated finance stuff, then I'm really sorry. This will be very simple. What typically happens is that a lot of people in the finance industry, like, so I work in the journalism industry, and many people call me up and ask, which mutual fund should I invest in, which FD should I, keep my savings in. But to be honest, I'm not really the right person if you want to, kind of sort your personal finances. So I kind of started thinking about, if you have an uh, if you want to invest some money, then who is the right person you should call to, who can then later on, help you with your finances and investment and stuff like that. So okay, let me start with the presentation then. So the first question people really need to ask is, do you even really need a investment advisor, right? Or someone to help with your finances? As you know, the number of people investing by themselves, DIY investor, is going up. If you look at the AMFI data on the number of direct mutual fund investor, it's hovering around an all-time high, right? More people are investing on their own, uh, since the mutual fund industry has been in existence. So do you really need help, or should you just go to the internet and kind of figure out how investments work, and should you invest by yourself? So if you think you're someone who can manage your own money, your own financial life, I would, highly recommend you to look at this, right? So first of all, if you want to sort your finances, you have to know where you want to invest, right? Stocks, mutual funds, bonds. And it might look simple, but there are like people who are in the profession doing this 24 hours, right? In a particular day. So there are more than 5,000 stocks. You might think mutual fund is simple, but there are more than 1,500 mutual fund schemes for you from which you can choose. So it's not really simple. Right? Now, let's say you have figured out how to invest your money, but financial life is very complicated, right? You need to also decide how you want to plan your insurance, which life insurance to buy, which health insurance to buy, which car insurance should you have. Then if you're earning any kind of salaried or business income, then you also need someone who can help you plan your taxes, right? I mean, this is a very complicated topic, as you already know, and there are CAs kind of doing this, and yeah, the list goes on. I mean, sometimes you will want to take a loan, sometimes you want to know which credit card is the most optimal for you. You might want to plan your retirement. And nowadays the education is becoming so expensive that you need lot of money if you want to send your kids abroad. So how do you plan for those kind of huge expenses, right? How do you keep track of everything? And earlier this was not a big challenge, but nowadays if you have a particular asset base, then how do you make sure that it gets transferred smoothly to your uh, sons and daughters and stuff like that? So I mean, if you think you can manage your finances on your own, I mean, just give it a relook. So that is it. Plus it's not as simple as just going to a bank. I've written some articles, if you go to a bank, they would want to sell products which have very huge commission loaded to them, right? And there are other kinds of product in the right, as I have pointed out, that which are structured kind of very similarly to mutual funds, but which are not. And for people who know, I'm talking about ULIPs here. And if you're still not convinced that you need someone to help you with your personal finances, then I would recommend you to read this article in that appeared in ET Wealth. So Ajit Menon is the CEO of a big mutual fund, and he retired from his post as the CEO recently. But look at this line: fund managers live and breathe markets. Yet Ajit Menon, CEO of India's 25th largest mutual fund house, swears by his financial advisor. So even the CEO of a big mutual fund company needs a financial advisor. So I mean, I don't know if I'm allowed to ask for comments, but is there anyone in the audience who still thinks they can manage all these things? I mean, if you think you can manage all these things, can you please drop in a comment in the chat or something? I just wanted to see how many people are confident. Anyways, so after you have decided that you need some kind of help in some kind of area in terms of managing your money and personal finances, the next natural step is that you'd want to know who to approach, right? There are so many mutual fund distributors, there are RIAs, there are investment advisors, there are research analysts, there are finfluencers. So who should you be going to get the personal finance help is the second part all about. So we recently did a story in Mint, and this chart really sums up the three major kind of SEBI regulated uh, distributor or investment advisors who can kind of help you manage your finances. So we'll go through this table slowly. We'll look at it one by one, the all the points, and then we'll try to understand what is going on here. So as you can see, first MFD means the mutual fund distributors, right? There are around 1.2 lakh registrations with AMFI. There are at least 1 lakh 22, 1.22 lakh people who are mutual fund distributors, right? So I mean, you can find mutual fund distributors everywhere, spread across the country. The RIAs are very less in numbers. I mean, some people called it the endangered species. So, just a funny way of saying it, but there are very few RIAs in number, and we'll get to the differences. And obviously, there are research analysts, which has a slightly higher number than RIAs, but compared to MFDs, they are still very less in numbers. So the major difference between a mutual fund distributor and an RIA and a RA is that the mutual fund distributor earns their money from the manufacturer. I'll explain this in more detail. So when you go and take the help of a mutual fund distributor, they are not charging anything directly from you. They will not take money directly from your pocket. Instead, what happens is that when you invest, let's say 10,000 rupees through a mutual fund distributor, then the mutual fund they are investing in, the AMC will pay a small commission to the mutual fund distributor, and that is how they earn their livelihood. That is how their business model works. So that is the mutual fund distributor business. Whereas if you look at the RIA and the research analyst model, here you have to charge your money directly from the clients. So what this basically means is that if you have some amount of money that you want to invest, they typically would not want to earn commission on that. Instead, they will charge you a amount upfront, and then that is their fees. Basically, you have to pay the money from your pocket, and they will not earn anything from the asset management company. There are slight nuances to this, which I don't think we should get into the details, but that is how an RIA and a RA business model works. Now, what's the difference between an RIA and a RA, right? So RIA stands for Registered Investment Advisors, and RA stands for Research Analyst. So when it comes to an RIA in an investment advisor, they look at each client individually. So let's say if you go to a investment advisor, they will first ask your family background, um, your other assets, and they will try to tailor investment advice according to your needs. Whereas in the case of a research analyst, it's a one-to-all service. So they would have a basket called Wealth Creator Basket, and if you buy that basket, you'll get a particular set of stocks or mutual fund you have to invest in, but that is not necessarily tailored to your risk profile. That is in general, provided to everyone. Now we'll get into more details about MFDs, RIAs, and RAs. So it's also very difficult to clear the RIA exam, right? So to become an RIA, you have to clear two exam, which is conducted by NISM. So like the first set of exam has a passing rate of 31%, and this 31% people will go and appear for the second leg of the exam, and in that exam only 60 people clear. Whereas in the mutual fund distributor exam, it's typically not very challenging. 50 people typically pass the exam, and then you can get the license from there. Cool. So let's get to the next slide. Yeah. So another way to look at the difference between an MFD and a investment advisor is if we take the analogy of a pharmacist and a doctor. This is a slide which I've borrowed from PPFA's mutual fund. So let me try to explain what he's trying to say. So so think of someone who is selling products as we're talking about mutual fund distributors here, as someone who is running a pharmacy, right? They have a list of medicines in their shop, and if you go to them and if you say, I have a fever, or I have some kind of ailment, they would typically recommend some kind of medicines to you, but they will not charge any money for recommending you that medicine, right? They will just tell you which product to buy, and then they will sell the product to you, and then they will earn their commission from there. Whereas if you look at a investment advisor, they operate more like a doctor, right? So in the sense, you when you go to a doctor, you pay a fee, and the doctor ideally is should not have any bias and should recommend the medicine which is more suitable to you without thinking about the commission aspect, right? So that is the major difference. Obviously, this is not a perfect example, but I think it helps for kind of giving a sense. Also, the scalability in a product kind of a model is slightly easier. So So when you're a mutual fund distributor, you have to sell mutual funds, right? You have to make people buy mutual funds, and uh, it's kind of relatively easy to scale up. Whereas in the investment advisory model, you have to talk to every client, understand their family background, health history, what other products, liabilities, assets do they have. So it's kind of challenging to scale up if you don't have the main power and if you don't train them. So that is another aspect. Third is the customization, right? So let's club this together, customization and risk profiling. So in a product led model, it's kind of standardized, and risk profiling exists. I mean, mutual fund distributors do risk profiling of their clients, but it's not as stringent or rigorous as what an investment advisor would provide. So that also means that the investment advisor cannot scale up that much, right? And since you have to work very closely with a client, with the client. So all that is fine. The investment advisory model, where you take money from the clients and where you invest on their behalf without any commission attached, that seems very ideal and seems like the way to go. But the harsh reality in a country like India is that many people are hesitant to pay money for advice, right? Indians are not known to pay for advice. So this is just one chart that I've pulled up. If you look in the in the left side, 58% of the income is generated through commissions, right? And only 14% is coming through fee-based income. Whereas if you contrast this with North American banks, if you can see, then for them the fee income is a huge chunk of their portfolio. So it it just shows that people in the developed markets are very uh, uh, comfortable with paying fees and paying for investment advice, whereas practically in India, even if that uh, seems like the better model in terms of not having any conflict of interest, but the reality is that not many people are willing to pay for financial advice. Instead, commission is the business model that works in a developing country like India. And there are other challenges of someone becoming a registered investment advisor. So first of all, there's a high entry barrier, right? You have to keep some amount upfront as lien. Um, until recently, there are huge entry barrier also. You need to uh, qualify in some kind of finance related. You have to have graduate degree in any kind of finance domain. You need to clear this NISM exam, which is relatively difficult compared to what a mutual fund distributor gives. Those are there. There's a high compliance of running a RIA business model. While the MFDs are not very are not that heavily regulated, but the RIAs are subjected to very high regulations, right? They have to do the KYC of client, they have to maintain it, and regular checks have happen. So it's very difficult for the RIA business model to survive. And that is the reason why, as we have seen in the earlier slide, there are very less number of RIAs in the country, and mutual fund distributors are very high in number. Yeah, and this slide is about one story that was done by Ken. So it's not like if you take an RIA license and if you are registered with the SEBI, that doesn't guarantee that the investment advisor will do good, right? So there is this famous story of many people who registered themselves as RIA in Indore, but in effect they were giving up stock tips and doing all kinds of shady practices. And here they've listed down number of entities where they were registered as RIAs, but the number of complaints they were receiving exceeded 500, right? So even if someone registers themselves as an RIA, it is not enough. You have to be uh, 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 ethical. You have to think about the client first. You have to think about the whole holistic kind of a planning. Yeah, so that is it. Being an RIA is not enough. You have to look for the good ones. Yeah. So this is a slide which most people confuse. So the question people ask is, if the RIA business model is very tough, why can't you simply become an MFD and start doing your investment, helping people out using the MFD license? Why can't the RIAs simply become MFDs, right? Uh, that is the question which many people have. So there are few key things that the mutual fund distributors cannot do as per the SEBI regulations, right? As per the SEBI and the AMFI regulation, AMFI guidelines. So AMFI simply says a mutual fund distributor can create a list of mutual funds which they can suggest to their clients and give incidental advice when they are selling the mutual fund. So the word incidental advice is kind of confusing till now. People have different interpretations of it, but for the purpose of this presentation, I'll just try to highlight some of the things that uh, the mutual fund distributors cannot do. So according to the regulation, they are not supposed to give direct investment advice. They are only supposed to give incidental advice, which is incidental to the sales that is happening. They also cannot call themselves investment advisor. They are not allowed to use the word financial planners or wealth managers, stuff like that. Uh, they also cannot make a financial plan. So what this simply means is that in the first slide you would have seen, in one person's financial life, mutual fund is only one part, right? There are uh, loans that a person has to take. There is insurance that he has to sort out. There is the tax angle. If you want to go for a foreign trip, you have to do different kind of planning. If they want to buy a car and finance it by taking an auto loan, then which is the best kind of auto loan? So our financial life is whole lot complicated than just deciding which is the best mutual fund to buy. So the difference between an MFD and RIA is that RIAs can give holistic advice taking into account all the stuff that is happening in the person's financial life. So they can recommend on loans, credit cards, tax, stuff like that. They just need to get a written signature from the client saying they are allowed to give this service. But mutual fund distributors by itself, they are not allowed to give financial plan. They're not allowed to make a financial plan. They can do goal planning and stuff using mutual fund, but they are limited to that, limited to mutual funds. Yeah, the third point is that they also cannot advise in insurance, loans, and stuff. It's a different thing if they also have a insurance agent license taken from the IRDAI, and many of them do that. But in principle, if you want to give financial planning, then RIAs are supposed to be the go-to place. Yeah, the fourth point, I think by now everyone is more aware about that. MFDs cannot charge money from clients directly. They can earn only through commission income from the AMCs. So what this makes is that Uh, the incentive is to sell uh, products which have a high commission, and it's natural, right? uh, the uh, aim would be to maximize the revenue. Obviously, I'm not saying everyone is like that, but the incentive is structured in this manner, and they also do not have any choice. They cannot charge money directly from clients. So yeah, that is the difference between an MFD and an RIA, and what MFDs can do and cannot do. So yeah, uh, we have talked about MFDs and RIAs and compared them to direct investors, but this is an interesting article which shows that when there was a downturn, a lot of the people investing on their own, they were the first ones to panic, and they were the first ones to close their SIP account, right? Whereas people who had a regular plan and who had a mutual fund distributor alongside them to help them navigate the markets, they were very resilient. They were not closing their account as much as the people who were investing directly were doing. So this is one uh, interesting article that also went viral on Twitter, and yeah, a lot of MFDs were uploading this. Yeah. So this is another story that I did for Mint. Let me try to make it more prominent. Yes. So there's an interesting thing wherein the tax system also favors the mutual fund distributors as against the RIAs, right? So let me try to explain this table. If you don't understand, then I can maybe revisit this because this is slightly number heavy and complicated. So let's say you have 100 rupees and you invest it through a MFD. Now after 1 year, let's say the amount becomes 110. So you get a profit of 10 rupees, and now you have to pay tax on this 10 rupees, right? There's a hypothetical figure. But we should also remember that 1 rupees is paid as the commission to the mutual fund distributor, right? And another 1 rupees to the mutual fund company as an expense. So net you get 108 rupees, and this 8 rupees becomes your taxable gain. Whereas in the case of RIA, let's say you're paying the same amount of money to an RIA, but since you're paying that money to the RIA directly, you cannot claim any tax benefit on that. So I'll run the same example for RIA. So let's say you invest 100 rupees with an RIA. After 1 year, it becomes 110 rupees. So you have a profit of 10 rupees, but you only pay expense of 1 rupees to the AMC, and the other 1 rupees that you had to pay to the RIA as a fee, you pay directly to the client, and that cannot be deducted against the gains. So in practice you end up paying tax on 9 rupees. So this is a slight benefit that you have when you invest through an MFD. Yeah, the if you look in the left side of the chart, this is also uh, another interesting data point that we found out. So MFDs are huge in numbers, right? There are at least 1.22 lakh registrations that are there with MFI for MFDs. But if you look at the data, so only 37 of the 1.22 lakh people are suspended, and 27 of them are terminated altogether, right? Whereas if you look at the enforcement action taken by SEBI against RIA, you would see already 151 cases actions has been taken up by SEBI against RIAs, and 151 complaint against a total population of something like 1000, right? um, Compare this to the number of enforcement action taken against mutual fund distributors, it's very low. So it kind of goes on to show that running an RIA model is much difficult in terms of coping up with the regulation, and mutual fund distributors are also in the regulatory ambit, but they are not as strictly regulated. Yeah. Yes. So this is another part that I wanted to add. Uh, so we right now we were comparing mutual fund distributors, investment advisors, and research analysts, right? But many people are turning on to YouTube and Instagram and taking financial advice from the so-called finfluencers. So, simply put, the definition of influencer is someone who is talking about finance in YouTube and potentially, suggesting products to invest or to buy or sell. But should you really be taking investment tips from them is the question, right? First of all, I would like to highlight that some finfluencers are regulated by SEBI. And they voluntarily go and register themselves as RIA, but they are far and few in between. Whereas the majority of people who are in the internet and talking about finance and investments, most of them do not have any registration. So that is the first red flag when you are listening to any kind of financial content. Secondly, I've tried to list some three, four business models of how these influencers earn money. Uh, the first is affiliate links, right? So SEBI and NSE has done a lot to curb this practice, but what this basically means is that during the COVID, lot of people went online. They had nothing to do, and they basically wanted to trade in the stock markets, right? So what the brokers came up was an interesting idea, right? They went to the influencers and they said, if you attach a link wherein people can open your account, and if you put it with your video, and if the person opens the account, and if the person starts trading and starts generating revenue for us, then we will share you a part of the commission, right? So what ended up happening is that the influencers would come and they would have this account opening link, and they would keep incentivize you to do more trading, to do more FNOs, basically places where the commissions were high, where the brokerages were high, and the influencers were in turn getting a cut from it. And the second part is advertisement and brand partnership, right? So a lot of the influencers, what we found out was they were taking money from companies and doing all sorts of things, but they were not disclosing that they were getting money to promote this products, right? So they would come to you and they would make a video and they would show that they are also genuinely using this platform. So for instance, some crypto company, they would come and they would show that, I am also using this app and stuff like that, but in reality they were paid by the crypto company to promote all these things, right? So as a user, when you're looking at the people in the internet talking about finance having millions of views, there are a lot of things to be careful about. Obviously courses also they sell, so SEBI says you can sell educational course which educates people about mutual funds and investing and stuff like that, but many of them were selling get rich quick kind of schemes, right? They would tell, you buy my course and you'll become a crorepati in few months or few days, I don't know. So yeah, so those are some things that people need to be careful about. And many people, as you would already know, they give stock tips. They will tell you to come on their Telegram channel and they would tell you to buy and sell all kind of products. which are basically not registered with the SEBI. So yeah, in short, uh, what I wanted to say was, when you're looking at someone in the internet, you should be very careful about what their incentives are, and also not jump on any conclusion that, since this guy in the internet said this is good, then we should also do the same. In reality, that can be very harmful. Obviously, disclaimer is that, there are some good people in the internet who are genuinely trying to spread good, finance content, financial awareness, who are ethical. But yeah, that is that. So these are some pictures, right? This is sourced from an article we had written. So one influencer had promoted one platform, making it look like a platform where you can do fixed deposit, which is like really safe and stuff like that. Actually, the platform went bust after many people invested, and after this gentleman made the video. And there are cases of people losing money, right? uh, Many people advertise about cryptos, and as you already know, cryptos are slightly in the gray area when it comes to regulation and stuff like that. Yes, and there are other people who kind of would want to give you advice based on astrology and stuff like that. So those also exist. Yeah. Yep, I think we can skip this, but this is a small chart again from an article we had done in Mint. So what influencers would sometimes do is they would post fake screenshot of them making huge amount of money, but those actually turn out to be false, screenshot of them making profits. And they would uh, uh, put in fancy cars in their videos, and they would try to say ki, hey, you should also become rich like me, and you should follow, and you should buy this course. So just beware about all these things. Yeah. So we have talked about broadly influencers who are not registered, and how careful you should be while listening to their advice. We have also kind of touched upon the investment advisory business and how it is different from people who are mutual fund distributors. We have not talked too much about research analysts, but I think I've given a gist that they provide service which is not tailored to anyone, but which is for the masses. But you still have to pay to access their service, and they're kind of similar to the RIA model, but so this is the current landscape, right? If you want to take financial advice, you can go to finfluencers, which is unregistered, or you can go to the mutual fund distributors. Then there is the investment advisor, and then there are research analysts also. So what needs to change in the current environment, right? What can we do? What can the regulators do to make investment advisory better? So this is just a broad chart that I have made that will show how the industry is currently, right? So if you look at this, I hope you can see my mouse. There are number of mutual fund distributor is uh, 1.4 lakh, right? And amongst that, the number of active mutual fund distributors is around 1 lakh. And now compare this with the number of RIS, right? This data is slightly dated. This must be, I think, last year, but there are only 1,300 odd investment advisors that are there. So it really paints a picture of fee-based advisory model not developing, not working in India, and we and the regulators and everyone needs to kind of make sure that the fee-based model also grows alongside the mutual fund distribution model. Yep. Ha. This is another chart which I found very interesting. So the mutual fund industry would be having somewhere around 75 to 80 lakh crores. Out of that, around 35 lakh crore is from mutual fund is in direct plans. So without any mutual fund distributors. And out of this 35 lakhs, uh, 29 lakh, almost everyone is buying and selling mutual funds on their own without any help, and only 4.7 lakh worth of, if I use the word number that is wrong, so this is the number of, this is the amount of money that is there. So 4.7 lakh crore is managed to RIS, but still like a majority of the direct of the mutual funds under the direct plans are still managed by people on their own. So that is how the trend is evolving, and I think there is a lot of space where people who don't know much about mutual funds but want advice that is free of bias, there is a lot of scope in this and this basket to grow. Yes, and while the number of mutual fund distributors are steadily going up, the number of RIS are going down, even when the numbers are already very less. So yeah, but there is a slight nuance to the number of reducing RIS, because SEBI came up with a lot of regulation that kind of was forcing a lot of people who were doing not providing the best kind of services to kind of leave in the industry, right? So a lot of the indoor players who were having a lot of complaint against them, so they also surrendered their license. So it's not all bad, but the number reducing does not show a good picture. Yes, so it's not like SEBI is not taking any action to increase the number of RIA. They are actively taking action. So uh, if you look at the chart, to become an RIA, you need to have, earlier you needed to have at least 5 years of experience somewhere in the finance domain, and you had to have a postgraduate degree, right? Which they have started relaxing. Now you don't need to have any experience, and you can be a postgraduate in finance and you can take your own license. But SEBI is further planning to reduce this barrier by allowing people in any stream, not just finance, but anyone, maybe a doctor or lawyer, can also now, they're proposing that they should also be allowed to take the RIA license. So they're reducing the entry barrier so that more and more people can become RIAs. Thirdly, what needs to change now, this is a very important chart, and let me explain what is happening here. So this is the number of RIAs that are there and where it is located, right? So if you see, in Maharashtra there are 517 RIAs. In Karnataka there is 133. In Delhi, small state, small union territory, there are 96 RIAs. But if you go outside from the metropolitan cities and the place from where I am, right? I'm from Manipur, so you can see there are hardly any registered investment advisors. If you go to Arunachal Pradesh, there are zero investment advisors, right? This would be same for mutual fund distributors also. Mutual fund distributors would be more concentrated towards the metropolitan cities, and there are not enough people who are there to help people in the remote area. So this is one area that everyone needs to work on, so that people who are not very aware or not very in tune in mutual funds, people from tier 2 and tier 3 cities, there's a lot of work to be done there, so that they also can get credible financial advice and they can also be part of the mainstream financial industry. Yes, and this is the last slide. So I was just looking at this. So I am from Manipur and I work in Maharashtra, and just I was just looking at the contrast myself. This is not to like prove any point, but just look at this. So in Manipur, like the average per capita investments per person is 5,000 rupees, wherein in Mumbai there is 2.51 lakh, and there are 260 AMC brands in Maharashtra, and in Manipur there is zero. And in terms of the state GDP, only 5% is invested in mutual funds, whereas for Maharashtra, the investment is in mutual fund is greater than the state's GDP. So these are very different state, and I'm not trying to make a apple to apple comparison, but I'm just trying to show the contrast of the growth opportunities which are there in the tier 2 and tier 3 cities, and which growth opportunity in other words means that there are a lot of services that are still lacking in far-flung corners of the country. So yes, I think we have finished the presentation. You might be having a lot of questions and would be happy to answer them uh, one by one. So if you could drop some of the questions in the chat, that would be great. Yeah, I think I have some questions. Okay, so I'm taking up the first question by Koshi. So they are asking, what are the reasons that the number of RIAs are so few? Okay, so this is an interesting question, and there are many reasons for this. The the primary reason is that first, Indians are not willing to pay for financial advice, right? So let's compare how a mutual fund distributor operates and how an investment advisor operate, right? So when you go to a mutual fund distributor, they will just tell you to buy a mutual fund, and they will not ask any money from your own pocket. So you just pay 500 bucks to the mutual fund distributor. He gets a mutual fund SIP and registers it with your name, and boom, you don't see the guy taking out money from your pocket. Whereas in the case of an RIA, the customer has to get money out of his pocket and sign a check, or do a GPay transfer or something. So it hurts to take money out of the pocket and give it to someone, right? So that is the major reason why the fee-based model is difficult, especially to implement in a country like India. So that is the first major challenge. The second challenge I would say is that uh, being an RIA is very difficult since they are registered directly with SEBI. There are a lot of regulation in terms of high barrier to entry. You have to clear some difficult exams to become an RIA. Once you become an RIA, you have to maintain a lot of records, lot of stuff. You cannot advertise freely. In another interesting thing is that whenever an RIA wants to advertise themselves, they have to first get the advertisement approved from an entity run by BSE. So uh, even to run an advertisement, it's very challenging, and the regulation also, I guess, makes it slightly difficult for this model to exist. And the regulator is trying their level best to work with the industry and make this streamlined. So I hope the number of RIS go up, but for now, I mean, these are the two major reasons why RIA model hasn't worked till now. Okay, so the second question is from Pawan. He is asking, if MFD becomes an RIA, what happens to his clients? As I understand, he cannot work as MFD after becoming RIA. So in the RIA business model also, if you take a corporate license, then you can take commission from that person, but you have to bifurcate your fee paying client and the commission based client. So there are nuances in the regulation which allows an RIA to still charge, uh, to still work on the MFD model, but I don't know how many people are doing that, and best to check with an RIA who was earlier an MFD and how the journey of him or her has worked, wherein they have transitioned from MFD to RIA. Another challenge that I've heard from a lot of RIAs is that uh, there are people who have invested in a regular plan, and if they want to transition to RIAs, they have to sell their existing plan and turn to them, right? Which is not feasible because you have to pay capital gains tax when you sell the mutual fund. The other challenge is that the RIAs, as per the regulation, cannot charge fees on top of, you know, regular plans, because regular plan already has commission built into it. So these are some challenges that exist in the industry, and hopefully, yeah, this will be solved. I think I'm running out of time, so I'll just try to uh, make this quicker. So, what is my view on CFP? Which is better, CFP or RIA? So, this is an important thing. A lot of people confuse. So, CFP is a certification, and RIA is a license. So, RIA is a regulatory thing, license, and CFP is just a education. Unfortunately, I think for now, CFP degree is not recognized as something which you can use to get the RIA license. You still have to go and pass the NISM exam, but CFP in general, if you have people use it with their name, and it's a prestigious thing to have, and you get to learn a lot of the nuances of how the investment and the insurance and all other parts of the finance work. So it's a really handy certification to have, and a lot of the good folks do CFP, but uh, having a license is completely different. Yes, so Koshi is again asking, is there no NISM or government initiative to reduce the restrictions, especially compliance, financial and taxation, so the number of RIS can increase? Yes, they are doing many things to make it easier for people to become RIS. We just have to give it some time and see how things progress. Yes. So Sanjay is asking an interesting question. Is it against law if someone acts as finfluencer without being RIA with SEBI? Are they finfluencers officially banned in India? So SEBI says there are good influencers and there are bad influencers. Good influencers are the one who are talking about mutual funds, trying to spread some kind of educational awareness, doing stuff that helps people. But influencers who are advising people on which stock to buy, which stock to sell, which options to buy, which IPO to subscribe to, without registration, SEBI does not have a good view on them. And if you go and check the SEBI website, they keep on taking action against people who are unregistered finfluencers and who have been caught giving investment advice. So obviously SEBI cannot go and punish each and every finfluencers, because the definition of a finfluencer is if you have a mobile and if you can shoot a video, then you can upload anything on the internet. But there have been very popular cases of SEBI taking very strict action against finfluencers, and they're just trying to show that people should not advise uh, just because they are influencer. They should take the license and do it the right way. Hope I have understood this. I think the question by Rajan can be taken up by the NISM folks. Yes. So one anonymous person has asked, I'm a CFP, what should be my next step? I currently sell mutual funds and insurance and provide tax planning service. So I think the natural step for you is to take a RIA license, because uh, you can do all these things in a RIA license and you will be falling under the regulatory ambit of the financial planning which RIAs are allowed to offer. So if you want to do insurance, provide tax planning, provide mutual funds, provide loan services, then I think you should go for a RIA license. But you do consult with other experts also, please. Yes, Nikhil is asking, does individual MFD has any target by an NISM MFI for making business? Sorry, I cannot understand the first part. What exactly you're trying to say? Why individual MFD are suspended by huh? So some of the MFDs, these are very few and rare. They missell stuff. So sometimes when the transaction is happening using a physical form, then sometimes they don't take the signature and they forge the signature. Sometimes they might tell that you're subscribing to XYZ fund, but they're putting your fund in ABC fund. So few bad apples are there in the mutual fund distribution business also, and that's why when complaints come to the AMC, then sometimes their license gets suspended. If you go to the AMC website of all the AMCs, and if you go to the statutory disclosure, then you would find a list of MFDs that they have taken action against and why they have taken action. So you will get a good idea of why people's ARN gets suspended. What about AUM from mutual fund distributors? So the AUM from mutual fund distributors is very high. They have contributed a lot when there were no internet, when there were only regular plans. They were the ones who were spreading awareness about mutual funds to the masses. And there was a news that came out yesterday that the government is training some of the postal services people who are employed as in the postal service to also give the MFD service, right? Because they are the ones who are reaching the last mile. So they are contributing a lot, and it can only keep on increasing. What is PAIA? It's person associated with investment advisor. So if you work under an investment advisor and if you are client facing, then you also need to clear some kind of exam. You cannot just go and advise someone because you are not directly the RIA license owner. But if you're working under them also, you have to meet some criteria. How to select mutual fund after age 60? I think you need to ask a good mutual fund distributor or an RIA or a RA this question. Um, Sorry, I would not know that offhand. So one more person is asking, if any degree holder can be an RIA, what would be the quality and expert advice expected from a non-finance person? So this is interesting, right? Finance is one field which can be learned, and lot of the good CEOs, CIOs out there, they are not from typical finance background. So if you know Charlie Munger is one of the most popular and uh, admired investor of all time, right? He had a law degree and he didn't have a finance degree. So uh, so not necessarily that people having finance degrees are good in finance and people not having finance degrees are not good. I think everyone should be given an equal chance. But that said, the person still has to clear the NISM exam, right? Which is slightly difficult in the case of a RIA and a RA. So the screening process of who is providing quality service will happen through that also. Besides, RIA and RAs are very expensive, MFDs are much cheaper. Yes and no. So if you have 10,000 to invest, then getting the service of an RIA would be difficult. But as your AUM size increases, many RIAs charge a fixed fee. So as your AUM size grows, I think RIAs also become feasible after some point. How to choose a good RIA or RA, any certification from MFNS. So yeah, so this is a very subjective thing. ARIA has a list of RIAs that they have listed on their website, but you have to talk to RIAs and you have to figure out how good you are bonding, how good is your vibe with that particular RIA, right? So it's a very subjective thing. There's no fixed answer to it. What is your financial advice to unregulated students? Undergraduate students, sorry. So for undergraduate students, I would recommend you can start a small SIP in any of the safer passive or large cap mutual fund. But most importantly, you can study on your own a lot. You can look up at the in the NISM website, take a few courses offered by NISM, and just keep on learning about stuff that you find. You can also read the Mint newspaper. We have personal finance page, and you would over time understand what investing and personal finance is about. Can an RIA become a distributor? Yes. RIAs and RA can be very biased and propose the investments where they are getting commission cut. So this is not true. Most of the RIAs do not get any money from the AMC. They are only charging money directly from you. So think of RIAs like a good doctor, right? A good doctor will take money from you and they will not try to earn any money from any kind of pharmaceutical company. They would just try to give you the best option. Ideally, that is how it should be. So, yeah, MFDs are also largely good. They also do not, they have a fiduciary responsibility to recommend the right products, but sometimes if they see huge commission in other products, then the incentive is such that they would sell the product which is generating them the highest uh, commission. If RIA ratio become low, what else or other option they have? So mutual fund distributors are there. If the number of RIAs are reducing, then people will have to take the help of mutual fund distributors. Vijay is asking, Indian people generally go to CAs for financial assistance. Is there any regulatory restrictions to the CAs for not giving advice? So CAs are supposed to deal with taxation and other kinds of stuff, and de facto they end up recommending a lot of people about personal finances also. But actually, that is now not how it should be. CAs are not meant to give financial advice, and their expertise is not in investments. Their expertise is in tax matters. If a CA is also good in investments, then they should either take the RIA or the MFD license and then uh, start providing their investment planning or advisory or distribution services. Harsh is asking, in India, the concerns revolve around trust, suitability, and qualification. As per your recent and finding, who could be alternative apart from money? Could be. Yes, it is true. So not just having an RIA or a MFD or a RIA license is not enough. People look at how the trustability of the person, what has been the experience of their previous clients. Obviously their qualification also matters, so it's a very holistic thing that you should consider while opting for someone. But the important thing is, don't go for unregistered players just because they are qualified or something. Always stick to regulated players and see who is the right match after you take the help of a regulated person. I'm very much interested to become financial and investment advisor. Can you suggest the certification for that? NISM is a good place to start with, because many of the, so you can go to the NISM website and you can check if you want to become an RIA, then what kind of NISM exam do you need to clear. If you want to become a RA, then what is the eligibility requirement and what are the exams you need to clear. And if you want to opt for an MFT, then you can also find what is the exam that you need to clear and how you can go about preparing for it. So yeah, you can refer to the NISM website. Currently pursuing CMA in third to restart my career. All the best. How to become mutual fund distributor individually. Sanmu Gapriya is asking. It's quite simple. So if you have cleared, I think, basic qualifications like class 12, I think, then you can appear for the NISM. I think it's 5A exam. Um, After you clear the exam, you can apply for the MFT license. Yes. Last question is from Kazim Ali Khan. He's asking, I want to enhance my career in finance field. So suggest me where I have to start. So it depends on what your current background is. If you're completely new to the system, you should start by reading books on the basics, right? Monica Halan has a good book on the basics of mutual funds and money. Probably that is a good start. There are a lot of free resources. Zero the Varsity is one, wherein they give a lot of free resources to understand the basics of mutual funds and investments and insurance. And yeah, you can also look up Mint Personal Finance. We try to write in a simple way so that it's not complicated. So yeah, you can learn like that. Yes, I think this is it. Sahil, can we end the presentation here?
Yes, yes, we can.
Thank you, everyone. We have gotten so many interesting questions, and thank you for being so engaging. Thank you so much.
Thank you so much, sir. I would like to extend a heartfelt thanks for taking time and speaking at the webinar. Your insight, expertise, and engaging presentation truly made a lasting impact on our audience. Thank you so much, sir, again for your time and knowledge.